The solo 401k benefits and how to qualify for one. What if I told you there's a retirement plan that allows a self-employed person to put up to $70,000 a year in a tax-advantaged vehicle that most business owners never set up? They never utilize it. And no, I'm not talking about a SEP IRA, a basic IRA, or your corporate 401k. This plan is built specifically for small business owners or independent entrepreneurs that are looking to build their retirement portfolio, possibly tax-free or tax-advantaged. By the end of this video, you're going to know exactly what a 401k is, who qualifies for it, what are the real benefits, the higher contribution limits and the Roth options that are available, the ability to invest in real estate, and even borrowing from your own plan. You're going to walk away knowing whether it is a tool that you should use right now for your retirement planning if you're an entrepreneur or business owner. So first, who actually qualifies for a solo 401k? Well, let's start simple. To qualify for a solo 401k, you need business income where you provide a product or service, and this can be a consulting business, a real estate commission, a contractor bringing in fees, a small online shop, a freelancer, anyone that has 1099 work. It's a side business or a primary business. Also, you could be an independent professional like a doctor or attorney that earns fees and doesn't have any other employees. You don't need a big company. You just need legitimate business income. And it's not passive rental income. We're talking about active income you're generating from your business. But there's one key rule that in order to qualify for a solo 401k, you can't have active W-2 employees working for you. The only employee you can have is you and your spouse. You can have contractors working for you, but no full-time employees. If you don't have full-time employees, you're in the solo 401k zone. So something most people don't know is you can stack a solo 401k with other retirement accounts. This is what people are typically surprised by, is you can have a day job with a 401k, and you can also have a solo 401k for your additional business. And you can have an IRA plan all at the same time. This can add up to massive tax savings of contributing up to $100,000 a year in a tax-advantaged retirement plan. Your employee deferral limit, if you're working for a company, is shared across the 401k plan, but your solo 401k gives you additional employer contributions that you'll be paying out of your own business. This means that the income in your additional business can become a separate wealth engine working alongside your regular job's retirement plan. It's not competing with it. And the barrier to entry to setting up these plans is much lower than most people think. So higher contribution limits that are built for entrepreneurs. What's the real advantage to these plans is the higher contribution limits built for entrepreneurs. This is one of the biggest reasons I love this retirement plan structure. As of 2025, the total 401k limit, that's the employer plus the employee contributions combined, is $70,000 a year. Comparing this to an IRA, it's not even close. An IRA is $7,000 a year versus $70,000 a year, a 10x multiple on what you can contribute to a tax-deferred vehicle. So the solo 401k gives you the ability to move the real money into the tax advantage bucket, especially in the good income years where you want to shelter tax. For self-employed people who want to catch up and accelerate to get their retirement goals earlier, this is a serious tool. Another great advantage that most people don't know about is the flexibility to choose the Roth category in the solo 401k. When most people think of a 401k, they're just thinking of Wall Street funds that their employer puts them in, and that's their only option. A solo 401k can be set up with traditional contributions where the tax deduction is right now and then you're taxed later. But then the Roth contribution allows you to be taxed now, but then you have a potential wealth creator in this bucket where you're tax-free on those investments for the rest of the life of the investment. This is a key feature I love about Roth because I believe that taxes will be larger in the future. And if I could pay the tax now and know in the future that there's no tax on those investments, I'm going to bite the bullet, pay the tax, and then have this vehicle that I can invest tax-free. A great feature of the solo 401k is it's easily self-directed. You can invest in real estate projects, private syndication partnerships. You can lend on real estate and receive interest income. You can look at alternative assets like crypto. And these are all legal within the IRS rules. You're not just stuck with the traditional index or mutual funds if that's not where you want to be. So loans, rollovers, and control. Another key benefit is you can borrow from a solo 401k within the IRS limits. In many cases, you can take a participant loan of up to the lesser. 50% of your vested balance or a maximum of $50,000 in the account. And then you can pay it back over time, usually up to 5 years. And this interest that you're paying is going back into your own account. So this gives you the flexibility if you absolutely need the capital for another opportunity. This is very rare in retirement accounts that you can borrow against that retirement fund. Plus, if you have high interest debt, you can use it to pay that off, and you don't have any of the withdrawal penalties that traditional IRAs would have. You can also roll over old employer 401k plans and many traditional IRA plans into your solo 401k bucket. So you're not leaving any money stranded in an old plan that you're not actively managing. So this consolidation of all your retirement plans makes it easier to run one focused retirement strategy instead of juggling these 5 or 6 different scattered accounts from different companies that you worked with. And then lastly, asset protection and legacy planning. Here's a part that most business owners don't talk about. Retirement accounts like 401ks often receive strong protection from creditors. And now, of course, these are subject to state rules, but if something goes wrong in your business or your personal life, your solo 401k many times can be the hardest asset that the creditor was going to reach. And from a legacy standpoint, a well-structured solo 401k can easily pass to your spouse or heirs, as long as you're following the inherited retirement account rules. And that money stays there, keeping the money in a tax-advantaged environment for additional years before it ever needs to be withdrawn. And that's not just retirement planning, that's family and legacy planning. So if you want to learn more about solo 401ks, I recommend a CPA. I'm not a CPA. We'll leave a link in the description to the CPA I use that helps set up my clients' solo 401ks, and they will give you the ability to make a good decision to create a plan at a very fair cost and what's right for your individual plan. I'm not a CPA. I am not a tax advisor. I'm not an attorney. I'm just sharing the benefits about solo 401ks and why they're so powerful for many business owners and entrepreneurs.